Hello, Keith Prather here with your NCM August report. It's actually the August-September report, and for the farm sector. And I want to go ahead and share my screen, and we'll dive into this. Here we go. So the farm equipment demand index, unfortunately, I wish I had better news for you this month. I wish I could start to show you some big improvements, but we're just not getting, that kind of reception from the marketplace. We're still showing our index at 59.1, which is down from 60 in July. We don't have all the September and October data in yet, but we'll get those updates. Hopefully, we'll start to see a little bit of a turn. But right now, we are still, well below the long-term trend. Now, the positive side of this is that if you look at the overall demand index, we are still a little bit hotter than we were prior to the pandemic, and that's something that continues. And we don't know if the index will continue and return back to those averages, or if we continue to stay a little bit hotter. As we look at farm incomes, and we'll talk a little more about farm incomes in a little bit, they're down for this year. But if you look at the total dollars of income, we look at on what we call a nominal basis, right? The total dollars available in the market. We're actually above the 10-year average for the total dollars available. Now, year over year, they're down, and we know that. But if you're trying to compare sales figures to maybe where you were in 2019 or even before, you're going to see obviously conditions are a little bit hotter than that. But we're well off our peaks that we saw, kind of coming out of the pandemic era. So a lot of things going on out there. We're about 1.5% lower month over month, and we're about 11% lower year over year. So still pretty weak overall. When we take a look at industrial production, we're also getting the same signals out of obviously the production side of the industry. So just on a year-over-year percent change basis, we know that the farm equipment production is down about 4.3% lower month over month between July and August, but almost 12% lower year over year. So still pretty sluggish environment out there. But what we are also seeing, and you'll see this in the report, is that a lot of farm equipment dealers and a lot of farm equipment manufacturers are really starting to watch their inventories pretty closely. And a lot of them, we're seeing inventories tighten up a little bit in some areas. So we're getting some decent sell-through in some products and some lines, and that may change the environment as we get into 2025. And we hope spending and investment decisions start to change, and farmers start to go out and start to look for new equipment at some point in time. We'll talk about that more in a moment. So the Purdue CME Capital Investment Index bounced up just a little bit last month, so it went from 31 points to 35, which, we like the positive momentum. We like the fact that we're seeing that cyclical month over month sequential improvement in the index. What we don't like is the fact that it's still sitting at historically low levels, right? We haven't hit the 31 that we hit in September of 22, but we are still pretty low historically, and well below kind of where we were, in the 60s and that range in 2017 and 2018. We know net farm incomes are going to take a hit this year. We know we're going to be down about 4.4%. Excuse me. That's a little bit better when we were starting the year in 2024. It's a little bit better than what we had expected overall, but still weaker than what obviously we would all like to see. So again, as I said early on, and the one thing is that incomes are down, but on a nominal basis and total dollars available in the marketplace, still sitting above the decade average prior to the pandemic. So there's still a lot of dollars moving around out there and still flowing around out there. But again, if you're a dealership to set your budgets based on what you did last year or the year before, that doesn't mean much to you. Your cost structure is going to be a little bit higher than what your current sales volumes are going to be, and so you're going to have to make those adjustments. We know that. But this is kind of where we are right now. Lowering interest rates, kind of a big deal. We think the farming community will benefit from it. I don't have a chart in here, but overall, as I've done in some of the other videos, if you watched any of the other ones for NCM, you'll know that the Federal Reserve obviously cut interest rates by 50 basis points in September. Based on current Fed forecasts, we think they may trim them again by at least another quarter point between now and the end of the year. Maybe some Fed officials are dovish enough that they're going to give maybe as much as 2 more quarter point cuts. One would come kind of late or mid-November. One might come in December. It just depends on economic data. And right now, at a macroeconomic viewpoint, things are still pretty good. We still see GDP running about 3% for Q3, which is a lot hotter than expected. Wages and labor still doing pretty good. So if the farming community just saw inflation come down for input prices, we just saw, seed and fertilizer prices come down, things would get much better. I know we took a hit in one of the fertilizer plants and one of the fertilizer distribution facilities down in Florida, and I know that's going to start to tighten some fertilizer products, especially in the Southeast, and that's going to be a bit of a problem. And that's going to keep inflationary pressures out there, especially for that specific commodity as we look at 2025 and the planning season ahead. But other prices like diesel prices are coming down a little bit. Again, interest rates are coming down, so some of that will help. Some of that will start to give farmers a little bit of relief. Now, if we can get a break in this drought, that would really help. But overall, that's kind of what we're looking at, for the year ahead. So machinery production, again, this is an overall forecast for all machinery. Ag is one piece of this, but right now, fairly flat environment, and it showed you early on that the actual ag sector is pretty sluggish. So we don't see a lot of popping up across all three of the sectors that make up machinery manufacturing. And the other piece of that, though, is that helps drop prices for things like steel. Some aluminum prices are coming down. Whereas we do see some prices like for copper and other component inputs into the farm production, machinery production process, it's still a little bit elevated, and some of those are even rising still. But overall, we're hoping that the inflation environment for both consumers, like at the farmer level, and for the machinery level, and the input prices for manufacturers, those continue to come down and continue to soften because that'll help overall. So looking ahead, we've got good macro GDP activity. So hopefully when it comes to the consuming of food, spending on eating out, all those things that do consume farm products, that we continue to see some good growth here. We are continuing to watch the situation in Ukraine. As most of you know, about 32% of the world's grain exports come out of that region between Russia and Ukraine combined. And as Russia moves further over and starts to impact the port of Odessa, it's much more difficult for Ukrainian farmers to get those grains shipped out of the area cost effectively and to move them through the Black Sea. We also had a grain cargo ship that was hit last month moving through the Black Sea, kind of unexpectedly. There's supposedly a safe corridor that those ships can move through, and we had one hit. So that changes the willingness of insurance companies to cover those ships when they're moving through those war zones. So bottom line is we could see some changes in global grain availability, and that could increase a little bit of demand for U.S. farm grains. Now that we have our distribution system kind of back in place, so we can export grains, we got the East Coast port strike out of the way. Hopefully, those conditions will improve overall, and maybe we'll see more exports, which will tighten the grain market, improve commodity prices a little bit, and hopefully with some lower input prices, we'll see farm incomes go up in 2025 a little bit. That's not the forecast right now, but I'm hoping that they'll improve a little bit and we'll start to see equipment move a little bit more. So that's what I've got for you. I know I threw a lot at you in a short period of time. If you have any questions at all, just reach out to me. And until next month, everybody stay safe and look forward to seeing you next month. All right, take care.